Thank you for joining me for episode 3 of the Investing Live series. Now, this one wasn't recorded from an actual live session. This one was pre-recorded on a different date only because I needed to record it. I wasn't available to do a live, but in the future they will resume being live sessions. Now, episode 3 means that this episode will be my $300th invested into that new brokerage account I opened back in episode 1. If you haven't checked out episode 1 or 2, I recommend you going and checking those out to kind of see the progress so far. But basically in this series, I'll be investing $100 for every episode that I do in an investment account, and we can watch this investment account grow together over time just to show you my strategies and what I, basically find having made investments over a certain period of time. Now, with that said, I'm not a financial advisor and I'm not here to give anybody any specific financial advice. So please make sure you do your own due diligence before you invest in the stock market. It is an inherently, risky place to invest, as you could probably have seen over the past few weeks. But again, nonetheless, it's one of the best investment vehicles that we have in our country for growing wealth and basically setting yourself up for financial independence. Now, if you are new to the channel and haven't done so already, I do recommend you going ahead and taking a moment and clicking the subscribe button up top. I try to upload as frequently as possible, but make sure to turn on those notifications too so you never miss a video and so that you can keep up when I go live and stay in touch with any new content that I upload to the channel. So let's go ahead and jump over to the Robinhood account and show you where I stand today. So as you can see, the balance today is, a little bit less than $300. We are $16 less than where we would want to be. With $100 basically ready to invest, it's 99.99, only because I typically, record these videos or do the live sessions after markets close. So a lot of those pending orders execute at a slightly higher or lower price than I had actually entered my trades at. Results in, a little bit off here and there, but nonetheless, for all intents and purposes, it is $100 that we're going to invest today. Now, my strategy has always going to be and has always been taking this approach where I invest 40% of my money into ETFs or some kind of index fund where it tracks, the overall market, S&P 500, the broad market, growth stocks, things like this, where it's a little bit less risky, a little bit more secure, but the growth just isn't as high as maybe a riskier stock would be. So I always take about 40% of my money and put that there. I take about 30% and invest in blue chip stocks, companies that have been around a long time, who also might not be experiencing crazy growth in the future, but are consistently growing, and they usually accommodate dividends to their investors off of those profits, those strong profits they have year over year. So those are going to be your Microsofts, your Amazons, your Disney, your Apple, companies like that. So about 30% of my portfolio is made up of those stocks and companies, and then about 20% is dedicated towards the riskier ones, companies that maybe are new, up and coming, pharmaceutical companies, things that are, really kind of more of a gamble in the grand scheme of things, but have potential based on the research that I've done and the diligence that I've done, have potential to actually, shoot up and give me some good gains, in my portfolio. And then I take the remaining 10% and invest in cryptocurrencies. I'm big on cryptocurrencies, but I'm also big on not having it be a large portion of your portfolio. You definitely want to make sure you're diversified enough and only be willing to put into cryptocurrency what you're willing to lose, because it's really an unknown market. So we're going to go ahead and jump right into it today. Now, I did want to mention one more thing actually before I jump into making the purchases for today. We've seen a lot of companies go through splits, stock splits. There's forward splits and reverse splits. Now, all that splits do are either consolidate the amount of outstanding shares available out there on the market or create new authorized shares so that retail consumers and retail investors can actually start investing in the company too. So when a company forward splits, say for example you own one share of a company at $1,000 and they do a forward 10-to-1 split, you would then own 10 shares of that company at $100 a piece. Your overall value of the holding doesn't change. You still have about $1,000 worth of shares in that company. It's just now easier to accumulate more shares if you wanted to. Likewise, when a company does a reverse split, they're consolidating shares. So maybe their shares are too diluted. Maybe they have, maybe you have 100 shares at $1 a share, and they want to consolidate that and take some off of the market. They do a reverse 100-to-1 share, reverse 100-to-1 split. Your 100 shares at $1 are now one share at $100. So that's really all that splits do. They're really just either increasing or decreasing the amount of shares that are out there, making them more accessible to retail investors and just more appealing in general for investing purposes. So I mentioned that just to point out that this Schwab index fund that I have actually recently did a 2-to-1 forward split. So if you go back and look at the videos, episode 1 and 2 specifically, you'll note that this amount was about half of what it is now. That's because it went through and did a split on the 10th of March. And actually Amazon just announced that they're going to be doing a 20-to-1 split. If the shareholders approve it, that'll be effective June. So for every one share of Amazon you have, you'll be able to have 20 shares at, I think, about $130 based on today's value. And then going forward, you could pick up additional shares at about $130 a share, which is great as well. So let's just jump into this. I'm going to go ahead and start with Bitcoin. I'm going to buy $9.99 worth of Bitcoin just to get that amount, to a round number. So we're going to go ahead and submit this. Now, again, cryptocurrency is always trading and always active. So this is an immediate purchase that happens. And just like that, we have submitted the purchase and made the purchase. And now we have a little bit more of Bitcoin in our overall holdings and have about $90 left to purchase various shares with. So the next company, we're going to go and buy some more of this index fund here, the Schwab account, the Schwab fund that just went through a split. And we're going to get $40 worth of this one. Now, again, because this is after hours, it's going to be a pending order. So we're going to just go ahead and place this. It's going to be queued up for us. And then once markets open up tomorrow, that order will process. Next thing we want to do is purchase our blue chip stock. Now, this is a new one that isn't in the portfolio yet, but Disney is one that I have been wanting to pick up for a while. I do hold some Disney in my other portfolios, but the reason I want to pick it up today is because it's actually on a little bit of a downturn with respect to price. If you look at the chart, you could see that, over the 5-year period, it has, gone up a decent amount. And, I think that eventually it'll continue going up on this pattern as well. And the high for Disney just about a year ago was $197. So at $130, you're getting quite a bit of a discount right now. Again, because of the volatility in the market, I think this is a great time to pick some up. So I'm going to pick up about $30 worth of Disney shares. I'm going to review this order and submit it here, and now it'll be queued up and ready to go for tomorrow. Now, again, I do want to point out that there are some great resources on Robinhood. If you're a first-time investor, don't know whether you should be investing in a certain stock, there's some great tools here, analyst ratings for you to understand the company that you want to invest in before you make that purchase. So make sure you utilize all those. And if you are new and haven't actually signed up for a Robinhood account, I do have an affiliate link down in the description. And if you use that, we both get a free share of a company. So, if you want to get started, that's a great way to do so. All right. So we have our estimated shares here. We're going to say done. We're going to go back here. And now what we have left is our $20 where we want to use on a company where it's a little speculative, but if it pays off, it could pay off big. And for me, I'm going to pick up some more shares of Arbot. So we're going to go to Arbot right now. They're down a little bit as well. But again, if you go down here, you should see some information, including the analyst's summary, which I don't think this one has quite yet. But we're going to still pick up $20 because everything that I've read so far about this company is, they could revolutionize the way that, surgeries are performed. And if they get the approvals that they need next year, we could see something like 10x our returns. So for that reason alone, I think it's worth, throwing some money at it here and there in hopes that, it really makes a big impact on our overall portfolio. And if it doesn't, again, we're going to be well diversified enough where we could take these little risks here and there. Now, when I say throw 20% of your portfolio total, or I'm going to be using 20% towards, the speculative companies that I want to invest in, that doesn't mean that all 20% are going to be going to one company. Obviously, this is a smaller amount, so that's why I am purchasing some more of this specific company. But that doesn't mean that every week I'm just going to be purchasing this company, because in essence, then you would have 20% of your portfolio on one risk, and that's too risky. If you're going to have 20% allocated to risk, you want to spread it around to a few different, companies, or, at least a bunch of different ones, just in case, a majority of them go down, maybe the few other ones will balance it out. So don't put all your eggs in one basket with one company. This is, again, I'm investing on a micro scale with $100 every episode. And so that's why I'm picking up some more of this particular company this time, but that won't be the case in future videos. So we'll go ahead and review this order and submit it. Okay, and so now it's queued up to execute tomorrow. And there we are. And so we have now invested our, $300th in the market in this account. Again, right now we're down about $16, but I don't anticipate that being the case long term. And it's so something definitely to watch for and join me for as I continue this series and, more and more episodes. Again, if you are new to the channel, make sure you subscribe, turn on those notifications so you're alerted every time I upload a new video or go live, and we'll see you next time.